Hey everybody, welcome to this free edition of our Trader User Group Weekly Roundup for the trading week ending November 27th, 2020. I'm Preston Brent. Thanks for tuning in. Hopefully you guys here in the US had a good holiday trading week with Thanksgiving, and we're going to be kicking off a new week next week, first week of December. Remember, don't be a rat brain trader, everybody. You want to be the red striped zebra, stand out from the herd. This week's theme is a fork in the road. So let's go take a look at kind of how we did this past week. Take a look at some a little bit about some weekly sound bites from the prior trading week, and then we will take a look at what the charts are showing us as we're moving forward in time. So if we take a look at the markets here, you can see that just about everything is in the green on the left-hand side for the U.S. index performance. For the week, we had a really strong week. Look at the Russell, almost 4% for the week, coming in at 3.92. Year to date, the Russell is up dramatically. It's almost caught up with the S&P. S&P is up 12.6, and the Russell is over 10% year to date. Just a huge dramatic move in the month of November. And of course, if we look at the sector performance, the best sector for this week was energy, as it was last week. It's up 8.47. The worst was still in the green with utilities up almost 0.5% at 48 basis points. Annual sector performance, you can still see technologies leading the way at 35%. Energy is bringing up the rear at 31%, but it's still with these two back-to-back very strong weeks for oil. And the energy markets is moving up, closing the gap a little bit, at least getting closer to break even for the year. Now, if you look at the PE ratio, look at the forward PE, 25.95. And even though it's lower by 37% of the trailing 12 months, it's still very high. And a big reason is if you look at the 10-year Treasury, it closed out the week at 84.2 basis points. So, a little over 8.5 or 0.8% of the market. And you can see the spread between the 10-year Treasury and the dividend yield, which is 1.65%, is 81 basis points. So it still continues to channel money into the markets. You can see the VIX, the prior week was at 23.7. This week it closed at 20.7. So the VIX actually moved down a little over 12% for the week. So volatility is still coming down, but it's still elevated a pretty good little bit. Now, if we look at the indexes for most of the larger global companies, you can see here again everybody was in the green this week, from the FTSE, CAC 40, DAX, Nikkei, China, Hang Seng, all finished in the green for the week. And year to date, you can see the DAX moved into the green. So we're working off these lows for the CAC 40, which is the Paris index, and then the UK index, the FTSE. It's still underwater in official correction territory. A lot of that is driven by the Brexit vote and some of the uncertainties around what's going to come out of that. But outside of that and the Hang Seng, we're starting to see a lot of repair of the damage that was done in March with the COVID crash. All right. Now, if we just take a look at some of the sound bites for the week, let's just talk about it for a little bit. Like I said, the index performance for this past week, a lot of vaccine optimism, some diminishing political uncertainty as Biden continues to gain influence, and so far the court appearances by Trump are being pushed back, although we'll see what happens when it gets all the way up to the SCOTUS Supreme Court. We'll see what happens there. But most of the major benchmarks are hitting record highs. And we even saw the Dow go over the 30,000 threshold for the first time. The other thing that's coming is we're seeing a wrap up finally of Q3 earnings, but we're seeing over an 80% beat rate, which for an average gain of about 18%, which is huge. I mean, it's huge. But we're seeing as the vaccine news comes out that some of the high performing tech stocks are taking a backseat to value stocks, or cyclical stocks and industrial stocks. So this value versus growth argument, Goldman came out this weekend and said that if the top 5 companies in the S&P from a market cap perspective, which is Microsoft, Google, Facebook, Amazon, and Apple, they account for almost 25% of the entire S&P. But if they were to fall 10%, let's say next year, and the remaining stocks which would be the other 495 roughly, rose by 10%, then the overall S&P would gain a net 5% for the year. Okay, so even though we could see some transition from growth to value, it does not necessarily mean that the large guys, if they roll over, the rest of the markets will as well, as long as the value stocks pick up the slack. Okay, from a volatility perspective, even though the VIX came down, it's still over 20. So now we've seen 194 days, consecutive days of the VIX trading above 20. That's the longest streak since 2009. Okay. And of course, this economic data for the past week is still draining some of the week's gains. Wednesday, we saw initial jobless claims unexpectedly going up to 778. It's the highest level in 5 weeks. Personal income fell about 770 basis points in October, which kind of pulled back from the gains that we had the prior month. And the University of Michigan's consumer sentiment was revised slightly lower. Okay, it's hit its lowest level since August, consumer sentiment. And the other thing that we got is we did get capital goods order surprised on the upside, right? Rising 70 basis points in October. And on the building side, September surge in new buildings, new home sales was up 1.9. So still home and the real estate side is doing very well. Okay. Now we do get, a lot more folks jumping into Bitcoin, although it really got decimated as we ended the week, but it's getting a little bit more of investor willingness to accept Bitcoin as kind of a way of hedging against inflation, or potentially the future of inflation. It's gaining more popularity with bigger institutions, and we're seeing more volume come into the Bitcoin futures than when it first opened. Now, gold has historically been the go-to inflation hedge, but more and more outlets like PayPal and others are accepting and easily converting dollars to Bitcoin. So I think this trend is going to continue with Bitcoin. So I would recommend on any kind of dip like we had. Now, I'm not saying that the dip is over from this huge move lower in Bitcoin. I'll show you the charts in a minute. I think it could pull back a little bit more, but I think any kind of dip, it's worth looking at buy as soon as you get a buy signal. Okay. And then, of course, if we look across the pond and look at Europe, shares are up 4 weeks in a row. As I showed you before on those charts, more and more green for some of the major indexes. Okay. And a lot of that is fueled again by the positive vaccine developments. And as the, at least over in Europe, fading US election uncertainties and things like that. And I think there's more expectations that the US Congress is going to compromise on a smaller economic stimulus package. So we're seeing some of that while the UK and Germany is continuing to extend their coronavirus restrictions. Right. So there's a little bit of a push-pull going on over in Europe, but still 4 weeks in a row of a move higher. And then, of course, if we look at the Asian markets, Japan, I mean, their markets are just going batshit crazy. I mean, even though they had also a holiday shortened trading week as well, they've moved up 16% this year, or this month rather. That's a huge move for the Japanese Nikkei in 1 month. Well, that's huge for a year, but in 1 month, it's remarkable. It's the highest level it's been since April of 1991. I mean, that's huge. And of course, in China, we saw the Chinese stocks rising as well for the week with solid economic data. There's still concerns there, and they seem to be going higher on rising defaults among their domestic bond issuers. But still, all in all, it was a very solid week as we come into what is traditionally the strongest trading month of the year, the last half of November and then through December into January. That tends to be a very strong bullish time for the markets, and more so for the Russell than the other indexes. Although the others are very strong, this is the strongest time of year for Russell, bar none. Now, what I want to do is I'm going to just shift the screen over. Let me take you to the charts here, and we'll take a look at these real quick here. Let me just move over here. So while the screen paints here this slide here, I'm going to show you some of the major indexes, and I'm going to show you some ratio charts of value versus growth, and just how value is starting to come into play here more so than it seems to be holding more than it did before. What you can see here is a chart of the E-mini S&P 500 futures. You can see we intraday was actually in the red the end of October, 30th, right? So the end of October, before we moved into November, the S&P actually had an intraday move or an intraday print below the 2019 closing price. And since then, and by the way, that low was at 32.25 for the S&P. We closed out this week at 36.37. That is a huge move, folks, in essentially the month of November. And we still got another trading day left. But I don't think it's going to be enough up or down to change this. Just a very strong move. You can see that the 2020 high was made back over here in when we had the vaccine announcement by Pfizer back on October or November the 9th. It moved up to 36.68. But we're going to probably come up, take that out, and move up to my target, as I've been telling our members, as we go through January, of anywhere from 37 to 3,800. And then we're going to set for a nice little pullback moving through February, March, and then we'll get a little bit of a bottoming area, and then we're going to move higher. Okay, so there will be a little bit of a pullback that we're going to experience, more so than 3 to 5% in the February, March area. At least that's what the charts are saying right now. Okay. Now, if we look at the Russell, take a look at the Russell, guys. This and one thing I wanted to show you here is let's go take a look at the Russell. And you can see here we hit all-time highs in the Russell on the 25th, right? And on Wednesday. And then Friday, we couldn't quite get back up there, but on Wednesday, we moved up to 1863. And get this, at the end of October, the Russell was down at 1521, okay? Now we're at 1854. It's 330 points in a month for the Russell. You can see the 2019 close. We were solidly in the red for the year. There is no divergences here also suggesting that any dip is going to be bought. All right, this is solid volume coming into this market here. If I look at the volume here, you can see, even though on this daily chart, volume has this first part of the move right here, all the way through to about the middle of November, huge trading volume. And then the volume is slacked off as we've got the typical last minute crew that comes in chasing the price as it's moving higher. But again, there is no divergences on this, so this suggests to me that any dip is going to be bought. Now, if we look at the NASDAQ, look at the NASDAQ 100. These are the top 100 companies in NASDAQ. So that would be, i.e., Amazon and Google, Facebook, all the big guys. We're still, the last time we made all-time highs was in early September, September the 2nd. We hit up here on the NASDAQ futures at 12,465, NASDAQ 100 futures. We've gotten close, but we're not there. Eventually, we're going to take it out. But look at the cash, look at the composite index, which is all of the tech. And you can see here that we actually made a new all-time high as we went into close at the tail end of this week. So this shows you that there are other companies within NASDAQ, not just the top 100, that are moving this up higher. So we made new all-time highs here as we went into close at the end of the week. Okay, and if we look at the Dow, we'll take a look at the Dow Futures. If we look at the Dow Futures, let me find it on here. Where are we? Here we go, right here. If we look at the Dow Futures, with the Dow Futures, we also on Wednesday made new all-time highs. Okay. At 30,165. Now we finished the week on the Dow Futures at 29,891. We pulled back a little bit, but we had a nice run on the 25th of November, okay, in the Dow Futures. Now, one other thing I wanted to show you is a ratio chart here, and on this ratio chart, let me just take you down to the ratios here. If we look at equal weight versus normally weighted, notice here that since September the 2nd, the equal weight has really been outperforming, or probably better said, since November the 1st. You can see that little bit of a pullback right here. And then November the 1st, we've just been off to the races. And when it runs up like this, It's a ratio chart of the equal weight over the SPY. Now, the SPY is the normal weighting factor for the S&P, right? So that's where you get the Microsoft, Google, Facebook, Amazon, Apple, about 25% of the entire weighting of the S&P. But the equal weight where everybody counts the same. So the smallest company in the S&P is no valuable or no less so than Amazon. They're equally weighted. You can see here it's been moving up dramatically. So this shows a shift in the buying patterns. And as I've been telling our members, we've been shifting from growth to value. Now, as the vaccine comes out, what we still don't know, what I don't know, is this just a let's buy the worst performing companies for now and let them move up and then we'll shift back into growth companies? Or is this a situation where the earnings have been projected out to 2021 and they've just been brought forward to today's date? So those that have just had really strong performances for the year, like Tesla, Amazon, Facebook, and some of the software companies, high-tech companies, they've brought all their earnings forward. So for next year, they'll continue to move higher, but at a very low rate. Yet those that have been crushed, travel and leisure, food distribution, airlines, things of that nature, cruise lines, those have been decimated. And with a vaccine, they're going to just take off like bats out of hell, right? And that's what gets this shift in this chart here of value over growth. Now we can see more of that because if I look at growth and value here, here's another way of looking at it with other ETFs. This one is moving lower because I put growth in the numerator and value in the denominator. So because it's going down, again, that shows value is outperforming growth. There is no divergences here, which suggests this is not just a 2-month phenomena. We had about a 1.5 to almost 2-month value versus growth win last year around the same time frame. So it could be just a end of year kind of portfolio rebalancing as we move into the end of 2020, but I think it could be a little bit longer lasting than that. And as I've told our members, I'll just put it on here. Let me just put on XLI, which is the industrial side. Look at industrials straight through the roof. Industrials is considered a cyclical, so any kind of cyclical or any of those, when we get this vaccine, these guys are going to do very well. Same thing as I've told our members about with like the airline sector. If you don't know which airline to get, you can just do JETS, JETS, straight up, right? I mean, that's a really good one. Or another one is just, now I've been playing Carnival, right? And you can see Carnival is just, it's going to move up probably the 2961, that fib node, that 50% fib node. I think it's going to, I still believe it's got a lot more legs to it, right? So just some really good movement that we're seeing in some of these underperforming stocks that are going to do very well. Now, if we look at volatility, you can see the VIX is now sitting at 28.4. It actually had an intraday print of 1944. I think it's going to stay a little bit elevated until we get through the end of this year, but it's going to just slowly work its way back down. And it's amazing because at the end of October, we were up at 41. So it's almost been cut in half in the month of November as the markets have been moving higher. Just a really amazing move, right? And of course, if we look at the bond markets, bonds up solid on Friday, over one handle, which means interest rates are coming back down again. We're near this 50 EMA. And as you can see, as long as we stay below that 50 EMA, I'm going to be a seller of the bond market, okay, or a buyer of long-term interest rates. That's one trade that I think is going to hold out a little bit. Now we're going to have dips as we have, like I said, February, March. We should have a pullback in the markets. Members, I'll show you a little bit more detail in our charts this weekly market watch this Sunday evening. But you can see what we're seeing here. And then, of course, if we look at the currency market, guys, I'm telling you, and I've been droning it in for our members for quite some time, you want to be bullish the euro. Being bullish the euro is another way of being short the dollar. And you can see we're coming up to my target of about 1.21. All right, and I've been bullish the euro all the way back over here into the September area. Now we had a little bit of a dip right here, but I've still maintained a bullish bias in the euro, meaning a bearish bias in the dollar. And of course, if we look at the dollar, you can see here it's coming down to my target right here of roughly 91.14. I think it can even go lower than that, right? So that's a little bit about what I'm seeing on some of the currencies. And then, of course, if we look at the British pound, British pound longer term, I am bullish the pound, but it's very choppy. We may have a little bit of a reset right here going into this all-important Brexit vote, even if it's a partial. I think longer term, the pound's going to be over 140 to the dollar, which is going to push the dollar down even more. Remember, it's the dollar index, not the dollar. And the pound accounts for about 12% of the US dollar. The euro is almost 58% of the US dollar. So just between those two, you're looking at 70% value of the dollar, just the pound and the euro. Now, if we look at the yen, which traditionally is the safe haven, you can see higher highs and higher lows, which is very unusual. I mean, look at this. It is a trend moving up. All right, let me just get that off the screen. And I'll put this regression line on here. Let me just find it. Here we go, right here. And I'll put it on right here at that low here and that high right there. You can see that regression line. Typically, the yen moves lower when global economy gets stronger, but here we're seeing this move up. So is this something that's kind of foretell a bigger move lower in the U.S. markets? Who knows? This big move up here, as you can see, it's a flight to safety. That was during the March crash, the COVID crash, and then things settled down. But now we're moving right back up again on the yen, which I find a little bit unusual. We got to watch it and see how this thing plays itself out. Of course, if we look at gold, down hard again, and we're coming down to my level down here. This is the shaded zone down here. And like I said, I am not long gold now. I think longer term, there could be some plays in gold, but until we get a signal on it, and you can see this yellow line is the 200 EMA, we fell below it. That is a very bearish sign for gold near term, right? Same thing with silver. So I'm not looking at that. Although our trade of choice, and has been since we came out of the COVID crisis in early March, is this one right here. Look at copper. It's just moving up really nice. Now our members are in copper. Many of our members are in copper. Some are in copper futures. And this is just a great way to play it. Now, another great way to play copper is to play a Freeport McMoran. And this was our trade of choice that I recommended folks get into. You can see the trend line, and we're just way up here. We hit my target of 24. I've got another longer term target up here at 39. And I just think it's going to keep right on running. Copper is where you want to be in a global recovery, and it's where you want to be short when the globe and the planet is just crashing. Okay, not a place to be. But in global growth, as we're seeing in China, China is one of the big movers of copper. In any metal, copper is just outperforming everybody, and that's where we want to be. Okay, if we look at oil, it's been doing very well of late. Now this is oil futures. If I blow it up and take it down, you can see just really moving very nice. This low point here was made at the end of October. We were down at $35 a barrel. Now we're at $45 a barrel. So we've moved $10 a barrel on a $35 price point, right? So you do the math and just take 10 divided by 35. That's a 28% move in 1 month. One of the largest moves in oil in quite some time. It doesn't look like it on the chart, but it's just very strong. So 28.5% move, right, in 1 month. Now, I think it's going to run out of gas and just kind of consolidate here a little bit. So for those of you option traders that like iron condors, unbalanced condors, call condors only, or unbalanced flies, this is a great trade. Members will take a look at that, like we'll do ratio diagonals in the European currency market, the euro. I think there's some really great trades in that also. Now, of course, that's kind of where we're sitting in oil. If we look at nat gas is trying to climb up, but any rally from this point is meant to be sold in the nat gas market. I think as we go through January and February, nat gas is going to be back below 3 again, or below 2.7 down to 2.2. Okay, so that would be from a nat gas perspective. All right, everybody, that's kind of a quick and dirty, a holiday shortened weekend of where we are in the markets. If you're not a member, I highly encourage you to come in. We're having a great time making money in our secret trader, that everybody can follow some of the trades that I'm running, as well as learn on your own with our Option Masters Education Series. Otherwise, members, I will see you this Sunday evening. Everybody else, hang tight. We'll have a nice one. Nice update next weekend for our weekly roundup. Take care, everybody. Have a great holiday weekend. Ciao now.